Vista Equity Partners is a private equity firm investing exclusively in enterprise software with portfolio companies across various industries. Ashley MacNeill is the head of equity capital markets at Vista. She joins us here at Post 9. It's good to see you.
You too.
Welcome to our show.
Thank you.
So you take a lot of companies private, and then you sometimes re-IPO them. The market for IPOs has been really, really slow. Why?
Well, for the IPO asset class to really be functioning well, you kind of need three things all working together. One, you need a stable macro environment. And realistically, we haven't really had that until we started seeing the rate cutting cycle start in earnest this fall. Then two, you need investor appetite. You need investors to be risk on. You need them to want to deploy capital in the asset class. And then third, and that's, I think, has really come together this year, is you need companies being able to report consistently and clearly with investors. So IPOs work by companies communicating earnings the next 3 to 5 years, and companies just haven't had that yet, and I think they really are starting to.
I mean, the irony in the whole thing is that here we talk every day about how strong the economy is and how the stock market's been hitting record high after record high after record high, and yet the IPO market has been all but dead. It's like something has to change soon, doesn't it?
Well, I think you have to bifurcate a little bit the tech IPO market versus the broader IPO market. But yeah, I think that we're starting to see companies get a lot more comfortable with communicating their story to investors. And that's really coming around sort of on both how the Gen AI narrative fits into their story, but also their ability to digest everything going on in the macro environment.
Companies are staying private longer. That's been a big theme that we've been talking about now for some time. What role do you think the growth in private credit has played in that as an alternate source of capital so companies don't feel like they need to go to the public markets? The private markets are exploding with money.
Yeah, I think it's definitely played into the delay of the IPO markets returning back to a sense of normalcy. That being said, the capital markets are efficient and creative, and we're going to continue to see like the evolution of the IPO. And I do think that the public markets will start to have an appeal, particularly as you point out, the high valuations, as well as the pull from investors to see these companies public.
Your founder and CEO, Robert Smith, sounded reasonably optimistic a week ago when I was with him out in Beverly Hills at the conference we were both at on a panel conversation about topics like this. I sat down with Todd Boehly, famed investor, and I frankly was surprised at how optimistic he was. I want you to listen to what he said, and we can react on the other side. Here's Todd Boehly of Eldridge.
I think we're in the process of having lots of M&A get started. I think we're seeing more and more activity. I think we're seeing people want to transact. People have to kind of get back to, the transaction business. So, across our portfolio, we're seeing lots of kind of merger and consolidation discussions going on. I think some of them are in their earlier days, but I think the animal spirits are coming back and people want to get back to it.
That raised a lot of eyebrows. I mean, animal spirits are coming back. And by the way, I've talked to people offline who think the same thing, that we're about to have that.
I think that's right. I mean, investors, there is a palpable energy from public investors wanting to deploy capital in this asset class. And I think it's because right now, particularly if you think of tech, there's so much innovation going on and there's so much ways to kind of play this Gen AI technology. And people want in today because it's so exciting. So I think he's right. He's speaking my language.
Yeah.
We need IPOs
that's why I wanted
back.
Your opinion on it. What about higher rates, right? We see the impact on the stock market here.
Yep.
What about, if we are in a backing up yield environment, what's the impact on what you do?
Look, cost of capital is always going to come into play. And whenever you IPO, there's a decision that the company has to make around the cost of equity. And do we need the capital? And can we find the capital cheaper elsewhere? So a raising rate environment traditionally has not been good for IPOs. That being said, I want to balance that with the fact that we are starting to see those three things line up: macro environment, investor appetite, and the corporates.
You guys, like private equity, sitting on a lot of dry powder. You guys raised a $20 billion fund not that long ago. Is most, if not all of that, going to go towards generative AI enterprise software companies? Is that I know it's the hottest area, but is it the only area that's of real interest right now?
Look, we view generative AI and investing in generative AI as similar to how you might think about the internet and how the internet came about. That this is a very early innings cycle that we're in, and that there is going to be length and depth to this investment cycle, and that Gen AI-enabled software is the path to the future. I think you have to look for breadcrumbs and proof points along that, but I do think that there is no investment without being focused on Gen AI in some capacity.